Good evening, everyone. Steve mentioned my name is Dave Sandstrom, and I'm sure if you've been coming to these seminars for the last several years, you probably remember my last unforgettable performance talking about the Secure Act, or the even more riveting Secure Act 2.0. And I'm also sure you've been on the edge of your seat all evening just waiting to hear about tax changes from the 2025 tax law. You know, actually, I had planned on a Brewers playoff trivia night, but Kyle said no, so it's 2025 tax law. So I'll take a page out of Steve's book. So I need a show of hands on anybody here tonight that's interested in paying higher taxes. All right, so pay attention. So this new legislation had significant changes on both the personal tax return and corporate tax return, with many, many changes. But for purposes of this evening, we're just going to stick to personal taxes that potentially could impact those of you who are in the audience this evening. So I've broken this into two categories. Ones that have been made permanent by this tax law, and then there are some that are going to be temporary and that will phase out in a number of years. The first one that I'd like to just make sure that everyone's aware of is that the tax rates that were created in the 2017 Tax Cuts and Jobs Act have now been made permanent. Important to know that the tax brackets, the income levels, will continue to adjust for inflation, but the actual tax rates have now been made permanent. I have included a schedule in your handouts for your review. Number two on the permanent side are the standard deductions that were doubled as a result of the last tax law have also been made permanent. For 2025, a single filer will be able to claim $15,750, and a married filing jointly will be $31,500. Those again should be indexed for inflation going forward. And then finally, on the permanent side, something that may impact those in the room eventually, and I'll clarify this in a second, is the wealth transfer limits. The estate and gift tax exclusion is now permanently increased to $15 million per person. That will be indexed for inflation going forward. Now, some of you may say, well, I'm not going to get anywhere near 15 million. What's important about this is that estate taxes at the federal level right now are 40%. That's a significant amount of your personal wealth that would have been given back to the federal government if you exceed that limit. And there was lots of chatter and lots of talk about that number being significantly reduced. So not necessarily that 15 is something that we'll all get over, but it does protect you against that number being drastically reduced. There's that tax rate sheet that's in your handout. Okay, the temporary features of the law. Now, there's been some confusion. There was a lot of talk about Social Security benefits becoming tax-free. Just had a client this week call me asking to change the withholding on their IRA distributions because they are no longer paying taxes on Social Security benefits. I had to set the record straight. That is not the case, even though that has been reported earlier mistakenly. Taxation of Social Security benefits is the same as it's always been. However, there is a senior deduction that was added, and that is for those of you 65 and older that qualify at certain income levels, can claim per individual $6,000 deduction. Okay, $6,000 per person, so if you're filing as a married couple, that's $12,000. Now those income limits phase out for a single filer at $75,000 of income, and for a married couple that is $150,000 of income. One thing to remember about this is it's pretty flexible. You can claim that senior deduction whether you are itemizing or claiming the standard deduction. So it's on top of both of those. The SALT deduction, that stands for state and local taxes. That is now been increased to $40,000. Previously, from the 2017 Jobs Act, that was actually unlimited. You could write off all of the state and local taxes that you paid from the prior year. It was pretty controversial because it was reduced to $10,000 through that, and in high-income tax states like California and New York, that meant significant tax increases, especially for wealthy taxpayers. So that was a negotiation on this last one, and it was raised to $40,000. Now, this is only going to be valid through 2029, so not necessarily a long-term exemption there, but that is something to consider on your tax return. Interesting to point out on that, however, you have to itemize to take advantage of that SALT deduction. You cannot claim the standard deduction and then additional SALT deductions on top of that. So that's an important one to know. And then there's another one that for those of you guys in the market for new vehicles, if you buy and purchase a new car in the United States, a car that was assembled in the U.S., you may be eligible to deduct $10,000 of interest paid on that vehicle over the life of a loan. Might be something to look at if you're in the market for an expensive new vehicle. There's income restrictions on that you'd want to pay attention to. And again, that is going to only go through the year 2028. So those are temporary deductions. The first three I mentioned are permanent. Now, as I look around the room, I do see the dominant hair color in the room. And I can say that because I'm joining you rapidly. There are two other ones that may not apply, but I thought I'd mention them anyway. Child tax credit for qualifying dependent children on the return, $2,200 now. It's a fairly significant increase. And then for those of you that might be moonlighting on the weekends, tips and overtime pay also have some deductions. So tips up to $25,000 can be exempt from taxation, as well as $12,500 worth of overtime per person. Again, temporary through 2028. Certainly not a complete list, but these are the items that you want to pay attention to coming into this new tax year. And as always, very, very important, please consult a tax professional because there were significant changes. Don't try to do this on your own. One mistake will certainly cover the cost of having a professional prepare your return. So finally, I'd just like to ask you guys to mark your calendars for next year's event when I'm going to tackle the topic of fun with root canals. I'll pass it back to Kyle for some closing remarks. Thank you.